Welcome back to our market update. Every week, I go over the latest articles of the week that could impact the local Bay Area real estate market. And this week, we got a couple of kind of comments and some of the things I've been sharing every single week because we've been doing this every single week now. How a softening real estate market could help you score a lower price on a home. Let's talk about that. Is the housing market going to crash? There's a few different economists and a few different individuals that have highlighted some comments here. San Francisco Bay's only private island finally hits the market. We spoke about this. I had a reel about this, but now it is on the market. And you can guess how much it is and what it is exactly. And last but not least, California's housing market data for home buyers and sellers in every zip code. This is a pretty cool tool. So I think you're gonna like it and feel free to use it to explore if you wanted to. Now let's talk about the headline articles of the week. How a softening real estate market could help you score a lower price on a home. So let's kind of go over a few of these summaries, right? For the 4 weeks ending June 30, homes sold for 0.3% below asking price, according to a recent report. Now keep this in mind. This is across the entire country. It's not necessarily it's not the Bay Area. The Bay Area is different, but without a doubt, I have already mentioned before, the market is softening. And this is, like I said, this is across the country. And I'll give you a few reasons why and a few things that can be possibly done. So here's a few comments. There's been recent pullback on demand, largely driven by high mortgage rates hovering around 7%. I don't actually necessarily agree with that. You may have saw from my article, my report in the last month, that interest rates are actually a little bit lower than this, and they have been on a slight decline. Low inventory homes is actually not really, it's a lower inventory relative to pre-pandemic levels, but keep this in mind. This is not a good reference point. Pre-pandemic levels was some of the hottest real estate times that we have ever had. Really bad baseline. It's probably better to just kind of focus on what has been more historical averages than just kind of cherry picking these really, really high baselines. So that's something to be mindful of. And then there's some comments of using stale home listings to your advantage. Home buyers are more likely to negotiate lower asking price on a home that's on a home listing that's been on the market for more than a couple of weeks, says this individual. You can probably come in with an offer that's 5% lower than list. If it's been on the market for 2 weeks or longer, the seller is probably feeling some pressure from not getting any offers and will be receptive to hearing an offer. So this is a true statement, right? So this is absolutely true. So there's a few nuggets I'll have here. Keep in mind, it is still the Bay Area, and it's always case by case. So do not read this or do not go with what I'm sharing here and use this across the board as a strategy, just blanket. But at the same time, there are individual cases where some homes are being listed more than what it should be worth today, or the market has softened. And so the previous number may have been accurate 1 or 2 months ago, but is no longer applicable today. So what does that mean in those specific situations? In the Bay Area moves at least 2 to 3 times faster than the national average in terms of velocity. So velocity in the Bay, you saw the mediums to sell is still 1 to 2 weeks. That's still normal. But there are many homes that can stay on the market for longer, for let's say 3 weeks plus. Those are more opportunities to be able to try to get it for lower price. But keep this in mind. This is what I like to do to save people time. If you feel like it's worth less, and it could be worth less, then you have 2 options. Either make a lower offer, right? And going kind of a number of 5% below, it's not a bad start. We'll see how it ultimately plays out. It's always going to be case by case, but it's not a bad start at all. Or it's simply having a conversation. Many sellers do tend to put their home on the market because they want to sell. They're not desperate to sell, but they would like to sell. Now, they may not like what has shown up in terms of the market, but a clean and good offer is an offer. And so you just got to be prepared for that accordingly. So going in at a lower number, but you also want to have a conversation with them, or I want the realtor to have a conversation with them, not you as a buyer. And this is important because it's some people are very stuck. Like they haven't changed their price in months. They don't want to change their price. So you have to be okay to basically pay a premium to be able to buy such a home. And to be fair, if it hasn't sold in more than a couple of weeks, then it is likely overpriced, or there is something wrong with it, because right now we're not in a rising market anymore. We're actually in a slight down market, or at least a flattening market for the summertime. So there is a lot of good opportunities to be done. So there's a couple of approaches that you can do. You can ask for a reduction in price. You can ask potentially for seller credits that can offset some of your closing costs, or how much money you're planning to put as your down payment to be able to fund a place. So basically the funds out of your pocket. So there's a few ways that you can now do this that are available that wasn't available before. So keep that in mind as you are continuing to actively look. And the reason, a big part of the reason why, and when I'm going to go over this every single week, is there's a ton of people traveling. There's a ton of people distracted by vacations that are out of the market. And it's not because of mortgage rates increasing. It's not because the stock market tanked. It's because people are distracted with summer. It's very, very clear because everything else is the same, if not better than before. So for those that are still around, they're still bearing the heat here in the Bay Area, stick around, be active, and you'll probably get a pretty good deal as of right now as we speak. Next, is the housing market going to crash? What the experts are saying. Mortgage rates are high, but home prices keep rising. Blame the lack of housing supply. Economists predict that any market correction will be modest and not on the scale of the Great Recession. Experts do not expect a housing market crash due to low inventory, strict lending standards, and other factors. And I don't necessarily disagree with this. A lot of this is pretty accurate, pretty true. You can see these articles will have a ton of comments. I think that will always hope that the world is ending. But I don't even know if those people will even end up buying anyways. They just want to see wealth being collapsing so that they feel probably better for themselves. But the reality is this. I don't think home prices are going to drastically improve unless interest rates can go drastically down. That's not really happening. I expect that we're probably going to have this kind of same situation for a while, which is the idea of like a lower housing supply, as in lower than last year, or sorry, better than last year. It's hard to be lower than last year, but better than last year. At the same time, probably lower than the pre-pandemic levels, right? And so you're going to have this. You're going to have plenty of homes that will come on the market each week. Don't worry about that. But because there's still a finite amount and you still have a good amount of people working, the stock market has continued to do well, you're probably going to see a mild increase over time. And so if you're kind of on the fence, actively making a move, the way you want to think about it is you're not going to have as many options to consider. So you may be wanting to be more flexible, and you can be more flexible in different ways. Maybe you're more flexible range. Maybe you're more flexible in the type of home. And last but not least, maybe you're more flexible to do some of the remodel work. Because rates are higher, there's actually less people doing remodel jobs too. So the contractors right now are actually way less busy than they were pre-COVID. So a lot of contractors are really, really hungry for work. So you're going to be able to, the prices on that is definitely going down. And feel free to have them bid with one another, but keep in mind the quality of it. You can't really put a value necessarily on the quality of it per se. So you don't want to just go with the cheapest person, but you want to go with the one that does a good job and hopefully at a very affordable price, kind of more of a value type of contractor to work with. And there are many of them because even the good ones are looking for business or they can take on more business. So these are all ways to increase your options. In that case, if you did remodel projects, I have great resources that can increase the sweat equity out of it. So these are all good solutions there. But in general, as you can see, there's really not any forecast because there isn't really any signs. Like there's no like clear things on why a thing will go a certain way. Now, if the stock market crashes or we get massive layoffs, as in, oh, wow, all companies only need 50% of their workforce because AI is really, 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 really that good now, then that's a different story. But unless these drastic external things change, we're probably going to be in this more modest but also consistent growth for a while because there's just not the same amount of velocity of homes, but there's still plenty of buyers that are slowly getting off the fence themselves. That's what's happening. Next, this is exciting. San Francisco's Bay's only private island hits the real estate market. So I spoke about this before. You have this Red Rock Island. It's a privately owned island up for sale in between basically San Francisco, Marin County area. And this is an interesting one, $25 million for a private island. That is awesome. Congratulations on getting that listing. Let's see how it does. You'll need to take a boat to get there. See, look, you need it's a good spot. A lot of fish in the area here. Good striper fishing, sightseeing. I bring a lot of people to take pictures for weddings. Oh, interesting. So people actually go over there to take photos. So there's an opportunity that just continues to be that way. Maybe somebody can eventually build something on it. It'll be certainly very costly to do such a thing, but who knows, right? Who knows this opportunity here? Take a look at this. It's a beautiful Red Rock Island, but will be a lot of work for anything. So I'm not sure exactly what someone will do, But if it does sell, super congrats. Incredible job if it does. But this is a very, very unique, clearly very unique situation that is available for sale. So if anyone wants to buy this one, send me a DM. Let's talk. Let's go for a ride. Last but not least, this is a cool tool that I saw from the San Francisco Chronicle. California's housing market data for home buyers and sellers, every zip code. You can see this. And this is, I'm not sure how they got this done, but whoever did this, awesome job. You can see the typical home value. You can see the median sales price, and it'll go by like shades, right? Like the darker it is, the more expensive these regions are. So you can kind of see on the macro, especially I've been reached out to a lot of people that have been moving here because of work, because there are very few jobs right now that are truly remote. Most companies, including like even Google and these big companies, want you to be in the office or highly, highly, highly encourage you for many reasons. But this is a cool tool just to understand like the general pricing of things. But the way that the Bay Area work is actually pretty simple. For a long time and continues to be, if you are on the this is a medium sales price. So if you were on basically the peninsula, San Francisco, all the way to the south, but like the peninsula side, this is the most expensive part of the Bay Area, right? So you can see the darker it is, the significantly more expensive it would be. But you can see it's pretty dark on this side because this is the most prime area. One, it has the least amount of homes, so people like that. Two, it's actually the coolest place in terms of weather-wise. So as you may experience this week, you will be very glad if you lived here. Right now, where everywhere else is like over 100 degrees, this area would be 80 degrees at that time. So it's like a significant amount, and that's considered hot already in this region. So this is a very modest temperature-wise, very good location because somebody can work in the city, someone can work in the South Bay. There are still other jobs in the peninsula. But then the more south, the more east you go, the cheaper it is. And so depending on your budget and depending on the type of home you're looking for, this is a very, very easy math indicator. Now, the sale to list price ratio, though, take a look at this. These are the ones that are going over 105%. Keep this in mind, like this is not a good barometer. And it's for that for a reason. So this almost, I would just say, like it's kind of useless because you can see almost everything is like this darker purple. And the reason for that is a couple of things. One, sell to list price doesn't mean anything. Like if every home is selling for $1 million near you and you list a home for $900,000, it wasn't going to sell for $900,000, right? And so that was a number that was just basically determined by the listing agent and the seller of how they want to enter in the market. It didn't mean that it was worth $900,000. It doesn't mean it's worth 1.1 either. It's going to end up to be the same, about $1 million. So but certain areas, like for example, it would have been cooler to see if they had the 120% plus or the 110, 15%, like much more extreme than this, because you have certain metros and certain areas that they do this on purpose by listing it crazy low. Many places in San Francisco do it this way. A lot of places in Berkeley, East Bay, they tend to do it this way, where they list it to these artificial, really fake numbers. I'll give you an example. I helped a client buy a property, a condo, nice condo, not in a huge building, but it was like a 40-unit building in San Francisco. And the individuals bought it as original owners first. They bought it for $135, but they listed it, I think, for like either 1.1 or something like that. Like I think like 1.1 or 1.15. It had no chance it was going to sell for that amount because even they've owned it for like 9-10 years. Even though the condo market hasn't gone like crazy good during that time, it definitely didn't go down when you're looking 10 years ago, at least in that area. Other areas may be different, but in that area it didn't. And so the result was they still got 10 offers, right, for a condo in San Francisco. And we ultimately got very fortunate to get it. But at the end of the day, there was a few top bidders that all ended up in the same range. So 3 out of the 10 offers were all like really doing the right thing of like, this is what it's really worth. And unfortunately, all those 7 other people were really, really far off and didn't even have a chance. So that's something to be mindful of in terms of just this. So this is not too good of a stat, but this is kind of cool for people to see. And I think if you even hover it, then you can kind of see the median sales price individually I think it's by zip code. So they're all sorted by zip codes, but it's a really cool view and it's a really convenient view. I don't think other platforms actually have something like this. Even my own doesn't have it. Really, really slick of what they did in terms of incorporating this. And this gives you a high level idea of like what you can expect in terms of different numbers. Now, the median sales price is a little bit trickier for these. So you still use it as value, like as it being very helpful. But as you can imagine, when you're only looking at a zip code, there's only so many homes that sells in a specific area. So this will fluctuate quite a bit, even though it's the median amount. But nevertheless, you can play around with it. You can see high level, like what you can expect when it comes to these types of homes and where may be the best suitable for you. But of course, if you're looking to buy, sell, or invest, I want to have a conversation with you. My contact details are below, 408-547-4590. Send me a text, give me a call. We can go over a game plan, see what works for you, and help you along with your move. Enjoy the rest of the 4th of July weekend and stay cool.